This is the Multifamily Mastery Meetup, and our 29th one, in fact. I'm your host, Cole Farrell, and co-hosting with me, as always, is David Ribardo. Before we jump into the interview, a lot of you met him last time, but we have an amazing sponsor, Gary Marissa. He was our speaker last month, and we have a whole bunch of material over there that you should check out. But Gary's a national direct lender. He does DSCR, fix and flip, bridge loans, government, CMBS, the whole gambit. He has been doing this for 23 years in Wall Street, and he's raised over $6 billion for real estate and the like. I use Gary on all my stuff. All my colleagues use Gary. He is the man. That's a personal note from me. So definitely reach out and check him out.
I'll also just add this about him. If you are an established investor and you have your own lender relationship, he's still worth talking to, because Gary, the one thing he did for me when we started talking, he took a look at my portfolio and he said, okay, here's some equity. We can tap into this. And it was awesome to have such an experienced eye looking over the assets that we have. And he found a whole bunch of money and got me a free rental property there. So can't say thank you enough for that.
Agreed. So with that being said, we have Marissa here. Marissa works with 1031 Corp. I'm sure many of you have known that and you use 1031s. Marissa is a paralegal and certified exchange specialist. You have facilitated thousands of transactions and has quite an amazing bio that I'll let her tell you about. So if you want to dive into that.
Sure. So I don't know about amazing bio, but I have been in the 1031 industry since 2004. So been doing it quite a while. And I'm currently our Senior Vice President and Chief Compliance Officer. I also do all of our training. I started as everybody else that comes into our company starts as an exchange coordinator, which means doing all the details, like all the things for the 1031. So if you've ever been involved in one, lots of paperwork, right? If nothing else, the IRS loves paperwork. So being that we are part of the federal tax code and have to follow all of those rules, paperwork, right? And so I started as that and have kind of grown through the company, and now I wouldn't be the one to actually handle you or your client's 1031, but I have an amazing exchange team that will take care of all of those details and make it really an easy and exceptional exchange experience, but as simple as possible, right? We try to keep it as simple as possible, despite this being a pretty complicated part of the tax code. So that's it. That's my story.
Awesome.
Sticking to it.
Let's start off basic.
Yeah.
What is a 1031? Why do people do it?
Yeah. So this is literally the only slide in my PowerPoint presentation that I read word for word, because it really is, explained well. But Section 1031 of the Internal Revenue Code says that no gain or loss will be experienced, right, as long as you are exchanging actual real property that's been held for business use or investment. So simply put, if you have a piece of real estate, it's business use or investment, you can 1031 it, defer the taxes that you normally would have paid, as long as you buy more real estate that's business use or investment, right? 1031 is unfortunately not going to work for properties that you're flipping and your primary residence, right? So if it's a house you live in, it's not going to work for 1031, right? People do the 1031 exchanges mainly because, well, first of all, they don't want to pay the IRS any of their money, right? I mean, that's goal number one. You're going to defer those taxes. But more than that, they're really taking that investment and building up their real estate portfolio. Really, that's what they're doing, right? They are preserving that equity and that wealth and using it to accomplish short and long-term investment objectives. That's really what people are trying to do, right? They get to that ultimate goal. And maybe that first 1031 doesn't necessarily accomplish that, but maybe the second or the third or the 10th does.
So I like to put everything into 8th grade terms here. So basically, instead of selling a property, paying taxes, and having what's left over to invest, you kick the can down the road, and now you have all the money from the sale to move into this next one.
Yep.
And as long as you're not ultimately selling everything and getting out of the game, it allows you to grow your portfolio faster.
Yep.
Right?
Yep. It's like an IOU to the IRS, right? Just keep going.
Cool. So obviously this sounds like super, super too cool to be true. Obviously there's some catches, right? What are the restrictions on a 1031?
Unfortunately, there are a lot of rules, right? So there are time deadlines, there's other requirements. Some of the biggest ones, right? There's kind of 3 golden rules, if you will, with 1031. So the first I'll explain is the time deadlines, right? They aren't going to let you just go on and on and on and try and figure out what you got, right? And what you want to reinvest into. There's 2 time deadlines. They start the day you go to closing on the property that you currently own, what they call your relinquished property. From that date, you have 45 days to identify what you would like to buy in the 1031. From that same date, you have a total of 180 days to actually figure it out and buy and close on something on that 45-day list. Okay, so that's the first thing. The second is how much you actually need to buy for to really maximize your tax savings. And there's a lot of misconceptions around that, unfortunately. Some think that it's just the amount of cash that they get from the sale, or that it's just the amount of gain that they have in the property, and neither of those are true. So basically, in order to really maximize your tax savings and get the most benefit from the 1031, you want to reinvest your net selling price, which essentially you'll calculate by taking contract sales price minus your closing costs. And closing costs are things like real estate commission, transfer taxes, items like that, right? Your mortgage payoff, not a closing cost, right? So yeah. Third rule is what's called the same taxpayer requirement, right? So however you currently own the property that you're selling, whether it's as a married couple, individual, LLC, partnership, that same taxpayer has to buy whatever it is you buy through the 1031 exchange.
How many people here have done a 1031? Interesting. Okay. Perfect. What are some do's and don'ts that you've seen?
So unfortunately, the most stressful part of the 1031, as you might imagine, is that 45-day identification period. And here's why. Once midnight of day 45 comes and goes, whatever you have on that list, that's what you have to choose from to complete the 1031. There are no substitutions, alterations, or changes after day 45, right? And that can be very stressful for someone who doesn't know what they want to reinvest into, and they're already in that time frame and that clock is ticking, and they get to day 45 and maybe they toss a couple properties on the list, but as we're all aware, this market is insane. They may not be able to get one of those, right? So if that 45th day has come and gone and they can't actually buy something on the list, that's it. Their 1031 just blew up and there's no chance to figure something else out.
Well, so
unfortunately.
So here's a scenario. Let's say I sell a duplex on 1031 exchange and that day 44 is there.
Yep.
Is there anything stopping me from taking all 137 investment property listings in the Lehigh Valley and naming every single one of them as a potential?
So remember those rules I talked about earlier? Yeah, there's the rules. There's rules that go along with the identification. So they limit you. Can't do all 137 or whatever it is, right? There's the 3 property rule, which means you can identify up to 3 properties regardless of their combined value. If you want to do more than 3, you're subject to what they call the 200% value rule. Basically, that means if you list, let's say 4 or 5 properties, the combined value of all of those can't exceed twice what you sold for, or 200%. I know. It's a weird rule. I know.
Okay.
So there's limits. I did have somebody once that she faxed me. Obviously, this was quite a while ago, but faxed me a newspaper, and circled 16 different properties on it. And I went, no, for multiple reasons.
Yeah.
That's not going to work.
If somebody's in a syndication and you're a limited partner in it, can you take those funds once it sells or exits and move it into something else?
All right, everybody strap in, because this is like a 20-minute conversation on how you could make it work.
I don't know if we want to.
The quick answer is that becomes difficult, because if you are a partner inside of a partnership, right, that taxpayer that owns the real estate, right, and reports the real estate is a partnership. The individual partners don't own real estate. They own a partnership interest. And that is not something you can 1031. Partnership interests do not work for 1031 purposes. So if the whole partnership wanted to do the exchange and sell and everybody was on board, that partnership could buy and do the 1031. But the individual partners can't just take their individual interest and exchange it.
Makes sense.
Yeah.
Awesome. So how much does something like this cost?
Yeah, it's actually just a tier-based fee schedule for us. So if you're selling for $1 million or less, it's a flat fee of just $1,250, and that includes the sale of one as well as the purchase of one. It goes up incrementally. The next tier is $1,550, $1,700. You get it, right?
Okay.
Yeah.
And is there a simple mathematical rule that you could use to kind of calculate what the benefit would look like? So let's say I've got a 4-unit property for, say, $400K.
Okay.
What would I be looking at as far as the potential to 1031, and how much would I be saving in terms of additional buying power?
Well, so for the first part of that question, that's going to depend solely on that individual taxpayer, right, and their particular tax situation, because it's based on, like what you're going to defer or what you would have paid in taxes, whichever way you want to look at it, is going to depend on how much they bought it for, right? Whether they've put any capital improvements into it, and whether there has been depreciation taken. Like all of those go into calculating that adjusted tax basis, and then now what they're selling it for, right? So you're going to have depreciation recapture at 25%. You're going to have capital gains, which the highest bracket right now, it's based on your adjusted gross income, which bracket you fall into, but the highest is 20%. And typically, most investors are going to end up getting hit with an additional 3.8% net investment income tax. And that gets taxed right on top of the capital gains tax. I know, it's awful. Those are just the federal taxes. And depending on what state you're in, you might have state taxes too.
So it sounds like that's a pretty big chunk that you would be able to keep deploying to scale up instead of paying.
Yep.
Okay.
Yeah.
So to kind of get that hard number, though, is that something that somebody would go to you guys and say, here's what I'm working on, let's figure it out? Or how does somebody get like that hard number?
Is that your CPA right there?
Okay.
That is your CPA, right? So technically, we as the qualified intermediary or 1031 company, sometimes we'll hear our company referred to as a QI. We cannot provide tax or legal advice. We're prohibited from doing that. Yeah. So they have to talk to their tax advisor. Plus, you don't want me giving you tax advice. I don't know anything about your particular tax situation.
Fair.
Sounds good.
Yeah.
I mean, really, right?
Yeah.
They call us and give us like a couple of numbers, and that's what I work off of.
Yeah. Does anybody here have like a lot of familiarity with depreciation recapture? It's something I've been diving into recently, and it's frustrating and kind of mind-blowing. I don't know if it's something you could touch on and explain in a simple form.
Thank you for being the nerdy one in the group. I appreciate that.
I gotta ask.
Oh boy. Okay. So, I mean, typically when you own an investment property, right, it's going to be put on some sort of depreciation schedule, right? There's different schedules for residential versus commercial. But each year, your accountant typically will report a certain amount of depreciation for that particular property. I don't know. It's a good tax benefit, right? I think accountants probably get more excited about it than average people.
Yeah.
Right. But
I'm not going to try to expand.
Yeah.
The simple math is take the property's value, divide it by about 27.5 years.
Yes.
You write off that amount. Or if you're a little more aggressive, you do an accelerated cost allocation study where you throw a couple $100 to an online company. They give you a little printout, and now you get to take that, and instead of dividing by 27.5, you're like, You can claim 10 grand year one, 5 grand year two. It changes everything. It pushes up there. And if you've done anything to accelerate it, this is where you can really start to see the benefits of this, because now you're getting huge tax write-offs. And then when you're selling it, you don't have to pay those taxes. Kick it down even further.
Yeah.
You got
I'm
real
not giving you
nerdy.
advice.
You went
I'm
real
telling you
nerdy.
that I've
You
watched
busted
some
out
folks do
cost
this.
tags.
Yeah.
All
They're
right.
having a really good time scaling up their portfolios. Just it helps you to maximize that leverage there.
Yeah.
Yes.
So what does the process actually look like? If I want to do this tomorrow, what's it kind of look like?
Yeah, the sooner you call us, the better to kind of get everything started. You know, if you're thinking about doing a 1031 or selling your investment property, it's better to kind of know what you're getting into, do a little bit of homework, call us, have a conversation, talk about the different rules and the timeline of how things flow, right? Because I mentioned earlier, people that find out about this the day before closing or the day of closing, right? And they only have 45 days to figure out what they want to buy. So the sooner you call us, the faster we can give you the information about, hey, go figure out what you want to buy now, get it under contract before you've even listed your current property, right? Because that gives you a leg up when you've actually listed and sold your current property, because you know what you're investing into already, which means you're not going to have a failed 1031. So that sounds all great, right? But most will call us once they have a signed agreement with a buyer for their current property. That's when most call us. I mean, that's the reality of things.
And so I like dealing with worst case scenarios. So let's say I've got a 6-week long closing process here.
Mm-hmm.
How late can I wait to give you a call before I've really shot myself in the foot and there's nothing you can do to help? It's like 2 weeks, 1 week, like
No, I'd love if that were the case. But so technically, all the way up until everyone has signed on the dotted line and left the closing table.
wow.
Wow.
Not our favorite day, and the title agent is probably going to throw something at you. I mean, you know, but technically we could still get it set up. You know, you'd have to have a conversation with us. We require that we talk to the seller, right? And we need a copy of the signed agreement of sale, title, and then we'll put together all the documents, get it all over to the closing agent, and get it all moving. But it does have to be set up before it actually closes. Once you've closed and you've given up legal title, too late.
Yeah. Another little tidbit too, one of the things that we did with this, when we bought Newport Apartments, the sellers, we were talking to them for a while and it was kind of ongoing conversation. And from the get-go, they're like, hey, we're going to do a 1031. We're like, okay, cool. Go find whatever you want and you can work with them on that way. So I think it's great if you can have that kind of relationship beforehand, help them plan it out if you're a buyer, and it might give you a leg up. Because if you tell them you're willing to work with them and say, hey, we'll kind of do whatever on our end to make sure that you complete your difficult, long, weird process, no offense, that it'll go smoothly. So
it's not my rules, no offense.
And this can be one of the really cool things about a group like this, right? Who's got a single family, you know, or 1-unit rental property, right? So Jordan's got this. Who's got a duplex? All right, cool. So you got Sarah over there who's going to buy Jordan's. All right, Cole's got a duplex, so now you're going to 1031 turn your single into a duplex. All right, now you got your duplex, right? And so you can go ahead and tee this up where you're selling your duplex to buy Ryan's 4-unit, and then you chain these together with folks that you know, taking all of the time stress away from something like this. And then you go boom, 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 close on them all in a row. And so this whole group moves up together, building their portfolios in a tax advantage strategy here. One of the nice things about coming here.
There's some restrictions on like the type of property you can 1031 up to. So if I'm single, could I then purchase like a commercial property?
Absolutely. As long as it is real estate and you're holding it for business use or investment, it works. Yep. So you can mix and match residential, commercial, vacant land, farms, conservation easements, oil and gas rights, wind rights, water rights. There's all sorts of crazy stuff that you could 1031. Yep.
But it has to be one of those. It can't be something unrelated like an airplane.
Correct. Unfortunately, IRS tried to get rid of us back in 2017, and we preserved it for real estate, but not for personal property. So, you know, unfortunately, Airplanes, right? Those no longer can be 1031. The hotels that get sold or restaurants that get sold, the FF&E, the furniture, fixtures, and equipment, can't 1031 that anymore. The real estate you could, but not the personal.
Interesting.
Yeah. Yep.
Yeah.
So question for you. Can I 1031 exchange a property and keep this going forever?
Absolutely. Yes. So you can 1031 as many times as you want over your lifetime. We had someone who, they did it with our Bend, Oregon office, but he did 88 exchanges last year.
Oh my God.
Yes.
One
Did you
person.
know that multifamily properties
What?
exist?
I know.
Wow.
I know. No, I know. And he had some serious spreadsheets. You'd probably get real excited.
I'd be so excited.
Yep.
I'm in.
Yep. He was very organized, and he managed it all himself, right? That was one thing you were like, nope, not doing that. But he did. He's a very sophisticated investor, and he's doing more this year. Not 88, thank God, but
Wow.
yeah. Yep.
What happens when you pass away?
I was just going to go there. So those that are, 1031ing, right, they're using that to build their wealth, preserve equity, really make that work for them. Whatever that taxpayer owns, right, real estate wise, at the time that they pass away, their heirs actually get those properties at what's called a stepped up basis, or that day's fair market value. So if they've been 1031ing and they deferred a whole boatload of taxes, all of those taxes that they deferred over their lifetime, wiped away. Yep.
Wow.
Now, inheritance taxes, estate taxes, those sorts of things, those still exist, right? But the current estate tax exclusion is 12.92 million, so you have a little bit to work with. A little bit.
That's
But yeah,
amazing.
it's a good estate planning tool.
I'm assuming the answer is no, but then because that taxpayer is passed,
Yeah.
dependents cannot continue the 1031 train.
Well, so they don't have to, right? Because technically, if they inherit that property at $1 million and then they go and sell that property because the fair market value is $1 million, they sell it for $1 million, they don't have any taxes.
I guess if they were to hold that portfolio and wanted to keep growing that portfolio, so you did.
Oh, I see what you're saying.
Yeah, you did have any.
Yeah. I mean, they could continue, and, if they wanted to keep renting those properties, whatever it was, they certainly could. But what would end up happening is that basis that we talked about earlier would go back to whatever the date is that they inherited it.
Right.
So they would go forward from that point.
I guess I don't know how it worked with the transfer. If they didn't buy that, they inherited it. Could they 1031 that?
They wouldn't need to, because they don't have any tax consequences if they sell it at the time that they inherit it.
If they continue to hold it and then say 10 years later they've gotten appreciation there.
Yep.
And wanted to save on that tax and continue doing that. Could they, or?
As long as at that time they're still using it as a business use or investment property, yes, then they could. Yep.
Even if it was a different taxpayer bought it originally.
Yeah, because it was inherited by them, so now now they own it, right? Legal title is in their name or however it's titled. Yep.
Question. You had mentioned the 45-day, identification period. What's proof of an IRS, to the IRS of identification? Is it just a list with 3 things on it, or do I have to have a contract?
So it is technically just a list. We provide you a form letter, make it as easy as possible, but not a terrible idea to get something under contract within the 45 days, but that is not a requirement. So technically you just need to send us a specific address of a property, right? It has to be what they call unambiguously identified. So if it's a building that's got multiple units and you intend to only buy one, you have to identify the specific unit. Yeah.
You had also mentioned you can't do this with rehab flips. Is there a time limit? Do you have to own it longer than a people a year qualify as investment? Or?
Yeah, so technically there is no set holding period defined by IRS. We use as a good rule of thumb 1 to 2 years, 1 to 2 tax returns. However, more important than your length of time that you've owned it is actually your intention when you acquired it, right? So IRS wants to see that your intent is to hold it for long-term investment purposes, right? And rehabs or flips, your intent is to resell it, right? You're holding it for resale. So that's kind of the distinction there.
In your experience, Marissa, how often does it occur where the investor has already targeted their purchase property in advance of the 45 days?
In the last couple of years, probably 90% of the people that come to us have it lined up, only because of the way that the market has been, right? And people are worried about the acquisition part and that I'm not going to be able to find something. And so it's a lot. It's a lot of people that come to us and already know what they're buying or already have it under contract, right? And that's perfectly fine, even if they haven't sold or even listed their current property, because the dates on the agreements of sale don't matter, right? You can sign an agreement for the one that you want to buy well before you have a signed agreement before your sale property. Yep. Yeah, it's settlement dates that matter. So you sell first, then buy. Yeah.
So I think that's kind of along the lines of like a reverse 1031, right?
Oh.
Did you plan him?
He beat it to us.
No, I actually looked this up when I was selling something else.
Yeah. So yes, there is. So let's just say you got yourself into the situation where, oh shoot, right? I signed this agreement for the property that I wanted to buy, and I thought my current property was going to sell really fast, but it appears that's not happening, right? There is what's called a reverse exchange, where you can buy what you are obligated to buy before you've sold your current property. It is more complicated and more costly, but it does preserve your ability to do the 1031 exchange on your sale, your relinquished property. So yes, that is something that could be accomplished. Yeah.
And that would obviously assume you have the funds to close on the first one before you get funds from the sale of the.
Yeah, like high level, how it works is we actually create an LLC, a special purpose entity, to take legal title to that property for you. And you loan that LLC all the money to make that acquisition. So it's either you come up with cash or you work with a bank, and then we have to explain to them what the heck a reverse exchange is, right? Because they're like, wait, your LLC is going to buy it, but you as the taxpayer are not a member of that LLC. That's correct, right? But you're basically guaranteeing the funds, right? They use your credit and all of that to process that loan. It can get a little hairy, and if it's a bank that hasn't ever been through that process, they might tell you to go pound sand. I don't know. It's possible, but we try to explain it so that they, understand how it works, and that, listen, we're only in this for 180 days because the reverse works on the same timelines that the forward one does, right? So from the date that what we call park that property for you, you have 180 days to sell your current property that you own, right? And then once that happens, we will then transfer back the property that we had parked for you.
Well, I guess technically you could buy and not even identify the property you're going to sell yet. If you have a big enough portfolio, right?
Well,
is it reverse, or you'd have to identify the sale property.
Right. Yep. You have to with it. So when we park it, that starts 2 time deadlines for the reverse. One is a 45-day identification where you need to tell us what you're going to sell in your reverse exchange. For most, it's relatively simple because they probably don't own a crazy amount of properties. But for some, yeah, it could be a little tricky if their portfolio is pretty large. They're not sure which one's going to sell. Yeah. Right. Remember when I said complicated? Yeah. But doable, right? Doable. Yeah.
So if we wanted to sell several properties, great.
Absolutely. No, not if you're just selling multiple, right? And then you buy whatever it is you buy. You can sell and buy multiple properties in the 1031. Now, if you need to buy first, then you're in reverse exchange territory. But if you're just selling multiple properties and you can get those all sold.
So how does the timeline work if you're selling?
So if let's say you were selling 3 properties, the first property that closes, that starts the time deadlines. And then you need to get those other 2 sold before you can start buying. Yeah. Yep. You don't get to start over unless you set up separate 1031 exchanges with us. And then those each have their own time deadlines.
If you wanted to sell 3 to buy 1, you can do that,
Absolutely.
but then you would have to sell those 3 in the first 100.
You just need to sell all 3 before you buy that one big one. Yeah. You can't sell 2, buy it, and then, well, I guess technically you could, but we would have to park.
And then you would do one reverse.
Complicated. It gets complicated, but it could probably work. We could probably make that work, but it would get more complicated and costly to do it. So ideally, you would sell all 3, then buy. Yeah.
Your question?
Logistically, so like I go and sell a property. I know I'm going to 1031 exchange. At title, you guys hold the capital, and until the next closing happens,
Correct.
that's when that funds come in for that.
Yep. Exactly. Yep. One of IRS's requirement is that the seller not have actual receipt of the proceeds from the sale. So we set up an account that has their name, tax ID attached to it, and it sits there until they're ready to buy whatever it is they're going to buy.
Okay, and if it falls through, then just kind of like that gets taken out and you get your money.
Right. Correct. So if let's say you get to the end of the 45 days and you go, you know what? I haven't found anything and I don't want to reinvest my money into something that I don't love, right? Whatever it is. We would just send your money back to you on once the 45th day expires, next business day, plus whatever interest it's earned. And then you would report the sale as a taxable sale and pay the taxes. Yeah. Yep.
That was my next question.
Yeah, absolutely. That's one of the common pitfalls we got to watch out for is that
Yep.
from an emotional and a psychological perspective, some investors go out there and they are so focused that this is a 1031 exchange. They're so excited to reap these tax benefits that they go out there and they buy a property that's arguably a worse investment than had they just paid the taxes and waited for the right deal to come along. So you have to have that strategic decision making. And my recommendation, set your investment criteria before you even begin that sales process. And if that deal doesn't make it, just pay the taxes. Be patient. All right. You're playing a long game here. And if it does meet it, go for it and get that leveraging, get that advantage there.
Yeah. All right.
Valid point.
I want to switch to our next section. We like to ask these to every guest, and we'll make them relatively quick, but we're going to try to apply them to you.
Okay.
And so take these,
Lightning round.
as you will. From what you've seen, what separates the top performing investors that you see from everybody else?
Probably the planning ahead, right? Because they're the successful ones and the ones that end up being our repeat clients, honestly.
Yeah.
Is that simple enough?
Yeah, absolutely.
Perfect.
So what they do, they plan ahead.
So what's a daily habit that you personally value that contributes to your professional success?
Oh, goodness.
Obviously hydration.
Yeah, I seriously, right? It's not a Stanley, but it's big like one. Yeah, obviously hydration. No, you know what? Continuing to learn and talk to the different taxpayers that call us that want to do 1031s, because every single story is different. Every single one. Right? So constantly learning and finding out what those investors today are doing and how they're kind of tweaking this deal to make it actually work.
What is a piece of advice that you would give either yourself if you were starting out or a new investor starting out?
Talk to professionals who know, right? Don't try to take the easy way out and figure it out yourself or try to use Google, right? One of my biggest complaints, and I haven't vetted whether my assumptions are correct, I'll be honest, right? But we have a lot of people that come to us now and they go, okay, well, I created this LLC and I own my, my investment in it, and it's, got multiple members and this, and not everybody wants to do it. And then I also created this partnership over here, right? They are just going out and doing legal things without actually knowing what it truly means. And it wreaks havoc basically on their deals. It does. And it creates hurdles then that they now have to pay a legal professional to help them figure it out and either unwind it or whatever it might be. So please don't use LegalZoom.
Absolutely. That was my first 4 years of investing, is accidental landlord turned educated from Google and BiggerPockets forums. And
Yeah.
anybody want a bunch of units in rural Louisiana that have been cash flow negative for the past 7 years? Come talk to me. Right?
We can 1031 into them.
So yeah, no, absolutely, I agree 100%. That's absolutely the biggest difference between those that are successful and those who
Suck
learn
it
the
up.
hard way,
Yep.
dig themselves out, and then apply lessons learned. Find somebody whose hindsight can be your foresight.
Yep. Yes.
Cool. So what is the biggest non-monetary benefit that you've seen real estate investing bring to yourself, to your clients, and the people you work with?
Oh my goodness. Honestly, the stories that we get, so I'll use one of my clients. He did an exchange back when I very first started. And he did a couple of 1031s, right? But what he ultimately bought was a home that he and his wife now retired to. And it's like their dream place, right? Because initially it was an investment. He hung on to it, did what he needed to meet the 1031 requirements. And he emailed me and he was like, hey, I just wanted to let you know, like my wife and I are so happy. Couldn't have done it without, your help and obviously Section 1031, but I don't have anything to do with that part. But I just, I helped him complete the transactions over the years. And and now he's happy and got to where he wanted to be, and now doesn't have to, he's just going to hang with that property. That's it. Not doing anymore.
Wow.
So unfortunately, he's probably not going to do another exchange with us, but that's okay. That's okay. He did them for 19 years, so he's good to go.
It's about hitting your goals there.
Yeah.
Cool.
Yeah. And the good stories, right? Along the way, he was able to get a property that he was able to have his daughter rent along with some of her college roommates while she went to college in that particular area.
Oh.
Yeah.
Awesome.
Right.
Cool.
So, it's good.
So, any closing comments or other things you want to talk about 1031?
Well, I mean, just generally, right? So 1031, whether it's one time that you do it or multiple times that you do it, there are a lot of benefits. Obviously, the tax deferral is the most obvious one, but really it's getting to like that client that got to accomplish what he wanted to and is now just living it, right? And living happy. He's got still multiple rental properties that, he doesn't live in, obviously, but 1031 can get you to those investment objectives and really get your goals accomplished, right? And if you plan right and call us and talk to us about what your bigger picture is, we can maybe make some suggestions to kind of help get you there, right? So.
I mean, from my perspective, it's such a great tool because if you're refinancing, you're pulling 75, maybe 80% of the equity out. But if you're doing a 1031, you're able to sell that property and tap into 100% of that equity and grow your portfolio that much faster. That's awesome.
Yeah. Yeah. Absolutely.
Yeah. With that being said, let's give Marissa a round of applause and thank you for being here.
Thanks for having me.
So that's it. Please hang out, get some food, have some drinks, and check out Gary's stuff as well. Please don't forget, he is the best. So.